Hello everyone, welcome back to EduTap and welcome to Finance Current Affairs session. In today's session, we are going to discuss a very important news article of finance that is regarding the Reserve Bank of India that has issued the draft guidelines, the draft norms for the lending and borrowing of the government securities. So the Reserve Bank of India is trying to enhance the market for the government securities, and so the RBI has released, the RBI has issued the draft guidelines, the draft directions for the government securities lending. So what are these guidelines? What are these norms that has been provided by the Reserve Bank of India recently? So all of this we are going to discuss in today's session, and let's have the clear understanding of the draft guidelines that are provided by the Reserve Bank of India for the lending of the government securities. So in today's session, let's have the clear understanding, and this is very important from the exams point of view because this is for the first time that the RBI has released the draft guidelines for the government securities lending, and this is for the 2023. These guidelines have been released in 2023 only. So let's see that. But before starting with this very important topic, very important directions, there is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI. So through a single guidebook, you can get all your common queries answered. If you want to know about the examination, what is the pattern of the exam, what is the syllabus for the exam, what are the previous year cutoff for the exam, all these common queries can be answered through a single guidebook. You do not have to visit different links, you do not have to visit different websites. Even if you want to know about the preparation, what should be the strategy for the preparation, what should be the sources for the preparation, all these common queries are answered in this single guidebook, and there are the definitive answers that are provided to you. And this is made absolutely free of cost to save your time, to save your efforts, and you can easily download these guidebooks. The link is provided in the description box below, so do download these guidebooks. Okay. So now starting with today's topic, first of all, the Reserve Bank of India has released the Reserve Bank of India Government Securities Lending Directions 2023. So this is the draft that has been released by the Reserve Bank of India. And here we are going to understand the directions. But before that, how the RBI introduced such kind of thing. Okay. So first of all, RBI in its statement on developmental and regulatory policies document that was released on 8th Feb 2023, the RBI has introduced that, okay, we are thinking of creating a market, we are thinking of expanding the market for the government securities lending. So a well functioning, in the statement on developmental and regulatory policies document, the RBI said, in that statement, the RBI said that a well functioning market for the securities lending and borrowing. So the government securities should be lent and borrowed. That kind of market, well functioning market, will add depth and liquidity to the government securities market, aiding efficient price discovery. So we will be able to understand the price, we will be able to do the efficient price discovery of the government securities when there is the demand and supply, and there is the transactions that is going on. Okay, that demand and supply tells the price, their interaction tells the price. So with the demand and supply of the government securities, there will be better price discovery that will happen. Not the government of India will be able to dictate the price, or not the investors will be able to dictate the price. It will be the demand and supply mechanism in the market that will be able to tell the correct price of the government securities. No one person, no one authority will be able to dictate the price. There will be better and efficient price discovery that can happen if there is the supply and demand mechanism working efficiently. So it is therefore proposed to permit lending and borrowing of the government securities, which will augment, which will benefit the existing market for special repos. Special repos. First of all, repo transactions are what? Repo transaction. So let's take the example of the Reserve Bank of India and the banks. So the banks want money. They are in the need of the money. They are asking the Reserve Bank of India to lend money to the banks. So the RBI is lending the money to the banks. And for that money that is lent to the banks are giving the Reserve Bank of India in the form of collateral. They are giving the government securities. Okay, so I hope you understand that the RBI is giving the money to the bank. The RBI is giving the money to the banks. Okay, and for that money that is lent to the banks are giving the government securities as the collateral to the Reserve Bank of India. Okay, during the first leg of the transaction. So here the collateral is the government securities, and that's why it is a special repo transaction, because the collateral is defined that RBI will only be taking the government securities as the collateral. So when the collateral is specified, that is the special repo transaction, because the RBI has already defined that in the collateral we will only be taking the government securities. Okay. So the banks will also have to give the repo rate to the RBI in the form of the interest. Okay. So I hope you have understood the repo transaction. You already know about the repo transaction. So under a repo transaction, a holder of securities. So the bank is the holder of the security. The bank has the security, the government securities, and the bank wants money. So the bank is giving the government securities to the Reserve Bank of India in the form of the collateral, and the Reserve Bank of India is lending the money to the banks. So the investor sells them, the holder of the securities sells them to an investor with an agreement to repurchase at a predetermined date and rate. So here the collateral, that is the government securities, that is given to the Reserve Bank of India, is given on the agreement that we are selling the collateral, we are selling this government security to the Reserve Bank of India, and we will be repurchasing it on a particular date. So here the collateral is given on the agreement to repurchase at a predetermined date and rate. So remember that repurchase transaction we are talking about. Here the selling of the government security is happening to the Reserve Bank of India, and then there will be the repurchase that will be done by the bank by giving back the money that the bank owes to the Reserve Bank of India with the interest rate. Okay. The system is expected to facilitate the wider participation in the securities lending market by providing the investors an avenue to deploy idle securities. So what will happen that the many banks have the idle securities. They are like the dated securities, the government securities. They are going to mature after 5 years, after 6 years, after 10 years, after 30 years. So those kind of idle securities are left with the banks. Now the banks do not want to sell it, but the banks want to earn extra cash on that security. So the banks can lend the government securities, such dated securities. So it will enhance the portfolio returns. It will provide more earnings to the banks on that government security, that is for a longer period of time, and it will create a wider participation in the securities market, because the idle securities will be utilized now. So draft now in the statement on developmental and the regulatory policies, the RBI said that the draft directions will be issued separately for the stakeholder comments, and now on 17th Feb 2023, the RBI released these Reserve Bank of India Government Securities Lending Directions 2023, that is the draft directions has been released. Okay. So in exercise of the powers conferred under the section 45W of the Reserve Bank of India Act 1934. Now the Reserve Bank of India Act, that is the Act 1934, read with section 45U of the Act, the Reserve Bank of India hereby issues the following directions to all agencies dealing in government securities. So the power that why the RBI, how the RBI is issuing such kind of guidelines, this is the power that is conferred through the Reserve Bank of India Act 1934, and the RBI is issuing these guidelines for all these directions for all the agencies that are dealing in the government securities, let it be whichever agency. These directions shall be applicable to all the government securities lending transactions undertaken in the over-the-counter markets. So these transactions are specifically applicable to all the government securities lending transactions that will happen on the over-the-counter markets. So the lending transactions will happen on the over-the-counter markets. Over-the-counter markets are the markets where the dealers are the one, the brokers are the ones that are present, and there is no exchange. The trade is not happening on some national stock exchange or the Bombay Stock Exchange. Over-the-counter market refers to the markets where the transactions are undertaken in any manner other than on the exchanges. So the transaction is not happening on the exchange. The parties, the buyer and the seller, are coming together through the broker or the dealer, and they are doing the transaction. Okay. Or through the electronic trading platforms, the buyer and the seller are coming together and they are doing the transactions. Here the mediator, here the intermediary such as the exchange is not involved. Okay. Over the counter, I hope you already know. The GSL transactions may use any mutually agreed trading process. So for the government securities lending transactions, they are going to happen on the over the counter market, and they can use any mutually agreed trading process, because here the buyers and sellers are directly getting involved. There is no exchange, only the brokers and the dealers are present. So including but not limited to bilateral agreements can happen, multilateral agreements can happen, code driven or other driven processes can happen, anonymous or otherwise. So when the exchanges are not involved, different kind of agreements can happen. Okay, so I hope you have understood the basic idea that the RBI has the power to issue these directions, and the RBI has issued such directions that is applicable to all the government securities lending transactions that are undertaken in the over the counter markets. Okay, so now government securities, I hope you already know, but to understand the basic idea, the government securities are issued by the government, and the government is releasing the government securities for taking the money, and the RBI on behalf of the government issues the government securities. Okay, so here now the government securities lending will be able to happen. Okay, until now the RBI was the one that was selling the government securities, okay, to the people, to the investors, to the banks, and the banks can sell the securities further in the secondary market to the other banks, to the other investors, to the retail investors also. But now the government securities lending can also happen. The government securities lending transaction means to deal in government securities involving lending of eligible government securities for a GSec fee. So now I will be, let's say bank A will be lending the government securities to bank B, and the government securities will be provided to bank B. Now the bank B will be providing a fee to the bank A. So I hope you understand that there will be a fee that will be involved. So the GSL fee means the fee that is paid by the borrower, because the bank B is borrowing the government security, and the lender will be getting the fee of the government security for lending the security as mutually agreed between them for undertaking the transaction. So I hope you have understood that the lender will be the one that will be getting the fee, and the lender is the owner of those securities. It will be giving the government securities to a borrower on the collateral of other government securities. So the collateral will also be given. So here the government security is being lent to the bank B. The bank B is giving the collateral to bank A for a specified period of time within agreement that the borrower shall return the security borrowed to the lender at the end of the agreed period. So I hope you have understood this clearly. Okay, so now coming to the eligible securities. So there are the eligible securities, the government securities issued by the central government excluding the T-bills. They are the securities that will be eligible for lending or borrowing under a GSL transaction. So remember this very clearly, the central government securities, that is the dated government securities, are the securities that are the longer term securities. They will be allowed to for the lending and borrowing under the GSL transaction. The treasury bills are not allowed to lend under the GSL transaction. Government securities that is issued by the central government, let it be the dated government securities or let it be the treasury bills, all of these will be allowed, as well as the state governments securities will be allowed for the collateral. So the bank A is giving the dated security as the dated security of the central government as the lend to the bank B. So the bank A is lending the dated security of the central government to the bank B, and the bank B is giving the collateral. It is giving the fee as well, it is giving the collateral. That can be any dated securities of the central government, or it can be the treasury bill, or it can be the state government dated securities. Okay, so dated securities are the longer term securities, that is securities ranges from 5 years to 40 years, while the treasury bills are the short term. They are the money market instruments. They are the short term instruments of less than 1 year. Okay. The state governments also raise loans from the market, which is called the state development loans. They are the dated securities, just like the central government dated securities. So I hope you have understood the eligible securities also. So eligible participants. So now the following entities are eligible to participate in the GSL transactions as lenders of securities. So an entity that is eligible to undertake the repo transaction. So I have already explained to you the repo transaction. In the repo transaction, what is happening, that one authority is there, the other authority is there. the one authority is lending the money to the other authority. So A is lending the cash to B, and the bank B is giving the collateral to the A. B is selling the collateral to the A with the repurchase agreement that I will buy back the collateral at this particular time, at this particular date. So that is the repo transaction, that is the repurchase transaction that is happening. So the B is giving the collateral, the B is giving some securities to the A on the promise of repurchasing it on a particular date, and the A is lending the money to the B on some interest also. So an entity that is eligible to undertake the repo transactions in government securities in terms of the directions by the RBI, the banks that are allowed to do the repo transaction in the government securities, any other entity that is approved by the Reserve Bank of India to act as a lender, or the entities that are eligible to undertake the short sale transactions in terms of the directions. So they are the entities that are allowed for the short sale. So it is the scheduled commercial banks, the primary dealers, the urban cooperative banks, and any other regulated entity which has the approval of the concerned regulator, that is SEBI. Okay, because the short selling happens in the exchange, so SEBI is the regulator of the business of short selling, we can say. So I hope you have understood this very clearly. Okay, short selling is a complicated kind of aspect. I hope you already know about it. Simply what is happening, that you are selling. Short selling means that you know that in the market the prices are going to go down. So right now one share is of 150 rupees and you expect the price to go down to rupees 120. So right now you do not have the shares of this company A, but you are selling the shares without having the shares. You are selling the 100 shares of this company A. Now you do not have the shares, so how you are selling the shares? See, you are selling the 100 quantity, the 100 shares of company A without even having the shares of the company A. Because how? Because in the intraday trading you have to buy the 100 shares of the company A, and that shares will be provided to the buyer that has bought the shares from you, because the transaction plus 1 day is allowed. So the transaction is happening. You are selling the 100 quantity of the shares today, but you have to settle it. You have to provide the shares by tomorrow. So you can buy the 100 quantity at a later time in the day. So intraday settlement means that whenever the prices go down, by the end of the day, you have to buy that much shares. So you have to buy the 100 quantity. So here the plus of the 100 quantity will happen on the same day. You have to buy the 100 quantity. So here this 100 quantity, let's say you are buying at rupees 120, the prices actually went down. So you are making the 30 rupees profit on each share. So short selling means selling the shares that you do not have, but you have to buy the shares on the same day. Okay, so you are selling the shares for 150 rupees while you are buying the shares on the same day at 120 rupees. So now this shares will be provided to the buyer that has bought at 150 rupees by the other day. Okay, so the settlement happens in the other day. So I hope you have understood the eligibility criteria for the participants also. Now coming to the settlement of trades. All GSL transactions shall settle on a delivery versus delivery basis. When you are delivering the dated securities of the central bank, you are getting the collateral on that. The first leg of all GSL transactions, that is the lending and getting the collateral, shall happen either on the T+0 basis or the T+1 basis. On the same day, you have to provide the securities and you have to get the collateral, or by the other day. Today the transaction has happened, but the settlement will happen tomorrow. So that is also possible. All GSL transactions shall settle through the Clearing Corporation of India. So the Clearing Corporation of India is the middleman, we can say. It is the mediatory, and it works as it interposes themselves between the counterparties. So there are the two counterparties. This is the buyer, this is the seller, and the counterparty, the central counterparty, it is acting as the seller for the buyer and as the buyer for the seller. So CCIL is actually a central counterparty. It is the Clearing Corporation of India under the Reserve Bank of India, It is set up in April 2001. It is providing the guarantee for the clearing and settlement functions for the transactions in the money, government securities, foreign exchange and the derivative markets. Okay, that is all that you need to understand. So the settlement of trade will happen under the Clearing Corporation of India or the other counterparties. So counterparties are in the middle of the two parties that are involved in the transaction. So now use of security borrowed and the substitution of collateral. So what is happening that the bank B is borrowing the dated security of the central government from bank A, and the bank B is giving the collateral to the bank A, that is in the form of T-bills or in the form of state government loans, state government development loans. Okay. So here what is happening now, how the bank B can use this dated securities of the central government that the bank B has borrowed. So now remember one thing, that the borrowing or the lending can happen under the GSL transactions. As per the directions, the lending or the borrowing can happen for minimum of 1 day and the maximum of 90 days. So let's say that this bank has got into the agreement that I am taking this dated security of the central government for 90 days. So for 90 days, this dated security of the central government is going to be with the bank B. Now bank A has too much dated securities of the central government. So the bank A is fine with it because it has too much of the dated securities of the central government, and actually the bank A is also getting the fee of the 90 days. So you can understand that this is a profitable event for the bank A. Now the bank B, now it has borrowed the dated security of the central government. So the securities that is borrowed or the security that is received as the collateral, they can be utilized under a GSL transaction. They have borrowed the securities or they have kept the securities as the collateral. So these securities can be sold through the repo transaction. Okay. So let's say the bank B that has borrowed the dated security of the central government. So the bank B has got the security of the central government. Now the bank B is keeping this security with the RBI. Now the bank B is saying, lend me this much money, lend me the cash and the collateral. The bank B is keeping this as the collateral. Okay, that after 1 day, after 2 days, I will be returning, I will be repurchasing this and I will be paying back your cash, I will be paying back your money. So through this dated security of the central government, the bank B is able to raise the money. So before, it didn't have the trustworthy dated securities for the central government or through the other players also. If not RBI, through the other players also, the dated securities of the central government can be given with the repurchase agreement and the cash is being taken by the bank B for a smaller period of time, less than 90 days. And after like a particular time, after 10 days, let's say, the bank B is getting back the dated securities for central governments. Now the bank B can also lend the dated security that it has got for the 20 days, let's say. So the bank B is also getting the fee on this dated security for central government. So you can understand that there is too much lending and the selling that can happen. Okay. So the securities that is placed as collateral may be substituted by the borrower with other securities in terms of rule of central counterparty. So if these are not to be kept as the securities, there are other securities that can be kept as the collateral as per the central counterparty. So now coming to reporting of the trade, all GSL transactions shall be reported to the CCIL because this is the central counterparty for the GSL transactions. Okay, within 15 minutes of the execution. Any misreporting or the multiple reporting has to be told immediately so that no bad action is happening against them or no immediate action happens against them. Reserve Bank may call for any information or statement to seek any clarification if the Reserve Bank of India wants. The securities borrowed under the GSL transactions shall be eligible for SLR for the borrower. So if I am borrowing the securities, I can keep it as the SLR securities to show that okay, my SLR securities are complete. Okay. But the lender, because the bank A has too many securities, so the lender do not care, and that's why the lender is giving the dated securities of the central bank. So the lender cannot show the lent securities in the SLR. While the securities received as collateral can be shown by the bank A, can be shown by the lender in the SLR, and the borrower that has given the collateral, that has given the T-bills as the collateral, cannot show the T-bills under their own SLR. Okay, so I hope you have got the basic idea of these guidelines. They were a little typical. There was too many of the technical words that were used, but I hope you have understood the basic idea. Just try to remember the important things that has been told. Okay, try to remember the eligibility criteria, eligibility, the eligible participants and everything. So thank you very much. I hope you will be able to answer this question very easily now. And this is the second question. Now, the active secondary market in the government securities. So the government securities can be sold in the secondary market through the NDSOM or through the over-the-counter or through the stock exchanges. So I hope you have understood this very clearly. Okay. So do join our YouTube channel and join our Telegram channel for the PDF of this session. And you can mail us here or you can call us through this number. Thank you very much, everyone.